To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
The next two sections that we are discussing is section number 112 and section 113. Now these two sections talk about representatives of president or governor of a state or of any other company. Now whenever we talk about any single company, it has many different members. Now these members can also be another companies. It can also be possible that the president of our country or the governors of different states, they might also have shares in certain companies. So they can also be members of certain companies. Now because of their strict schedule, they might not be able to exercise all the rights relating to being the member. They won't be able to attend the meeting on a regular basis. They won't be able to exercise voting power in that company. So, with respect to such president and the governors, and also with respect to other companies who are members of another companies, there is this section number 112 and section number 113. Now, these two sections basically say that if it is a governor of any state or whether it is a president of our country or if it is any other company who is having shares in any other company, they have the right to appoint representatives who can exercise all the rights relating to being a member. Right. Now here I am talking about representative. Representative word is different from the word proxy. See, proxy is different. Every single member, if they are unable to attend the meeting, they can appoint proxies. And proxy only has the right to vote by poll or demand a poll. But when we say representative, then only the president of our country or the governors of the state or some other companies who are holding shares, only they have the right to appoint representatives. No other members have the right to appoint representatives. And when we say representative, then representative basically means someone who is going to represent such governor or president or another company. And such representative will have all the rights of the member. So such representative will have the right to appoint a proxy as well. They will have the right to vote by show of hands, postal ballot, electronic mode. And of course, they can also demand poll and vote by poll. So they will have all the rights of being a member. So that is what is stated in your section number 112 and section 113. The next section we are discussing is section number 106. This section talks about restriction in voting rights. Now we know that equity shareholders have the right to vote in the general meeting. They have the right to decide on certain matters relating to the company's decisions, right? So now with respect to voting rights, can the company restrict some equity shareholders' voting rights? Let's say there is a company and this company wants to give voting rights in the general meeting only to those equity shareholders whose names were registered in the last 2 months from the date of holding of the general meetings. Basically, this company is saying that only those members who were the members of the company in the last 2 months before the general meeting, they will get the right to vote. No other members are going to get the right to vote. Can the company do so? Well, the answer is no. And why is that? Well, the answer is according to section number 106. See, section 106 says that no company has the right to restrict the voting power of the equity shareholders except in certain circumstances, which is given in section number 106. Section 106 says that voting rights can be restricted if two of these conditions are satisfied. Now, the first condition is there should be specific provision in the article of association to restrict the voting right of the equity shareholders. And the second point here is that such restriction in the first point, which is stated in the articles, it can only be on two grounds. That is, in case the member has not paid the money on the calls or any other sum is due, or where the company has exercised right to lien on such shares because of certain reasons. Right, so these are two only reasons for which the company can restrict the voting rights of the equity shareholders in the general meeting, and that too if it is stated in the article of association. So only for these grounds the voting rights can be restricted. So the example that we just discussed, wherein the company wanted to restrict the voting rights of the equity shareholders in the general meeting because they were not members of the company before 2 months from the holding of the general meeting, that is invalid. No company can do so. The company can only restrict voting rights if the person has not paid call amount or any other sums, or where the company has exercised right to lien. And these details, this type of restriction is stated in the articles. Alright. Now, what are the different ways in which the voting can be done by the equity shareholders? See, voting can be done by show of hands, or it can be done by postal ballot, or it can be done by poll, or it can be done by electronic mode. Now, when we talk about show of hands or poll, then this is a type of voting which is done in the general meeting. When we talk about postal ballot or electronic mode of voting, then it is not done in the general meeting. It is done outside the general meeting, but it is considered whenever we are seeing whether the resolution is passed or not. Now, these types of voting are covered from section number 107 onwards till section number 110. Let's first discuss section 107, which talks about voting by show of hands. See, show of hands means in the general meeting, whenever the resolution will be read out, all those members who agree to the resolution, they are going to raise their hands. Each member is going to get one vote. So that means there is a member who is having 100 shares and there is another member having 1 lakh shares. Both of them are going to get equal votes. Both of them are going to get just one vote. They can raise their hands and cast their vote. Alright, so this is called voting by show of hands. Now, voting by show of hands is a general way of voting. So, until and unless a poll is demanded or postal ballot or electronic mode of voting is being conducted, until and unless that is done, till that time voting will be done by show of hands in the general meeting. Now, if someone wants, they can of course demand a poll as well. Now, whenever the meeting happens and there is voting done by show of hands, then the result of the resolution is recorded in the minutes book. Now, minutes book is basically the summary of all the businesses that were conducted in the general meeting. So, in the minutes book, wherever the resolution is passed by show of hands, the result is going to be written down in the minutes. Now, whatever is written down in the minutes is going to be the conclusive evidence of the voting. Right? So, see, it is show of hands. So, show of hands cannot be proved. There is no actual evidence that people actually raised their hands or they did not raise their hands. So, therefore, section number 107 says, whenever voting is done by show of hands, then whatever result is stated down in the minutes book, it is going to be considered as conclusive evidence that the resolution was either passed or failed according to show of hands. Next section is section number 108, which talks about voting by electronic mode. Now, what is this electronic mode? See, if someone doesn't want to come to the general meeting and vote physically, then they can also vote electronically just by sitting in their homes and accessing the internet. So, that is e-mode of voting. Now, it is an optional mode of voting. It is not compulsory for all the companies to provide the facility of e-mode of voting, but it is compulsory for some types of companies. So, according to the rules, which is the Companies Management and Administration Rules 2014, we have certain prescribed companies which compulsorily have to give the option of e-mode of voting to all of its equity shareholders. So, what are these types of companies? It is the listed companies and any other type of companies having 1000 or more members. These companies will compulsorily have to give the option of e-mode of voting to all of its shareholders. Right? Now, there is procedure also which has been specified in these rules which the companies will have to follow whenever they are giving the e-mode of voting option to its equity shareholders. See, before any general meeting, we know that a notice has to be sent to the equity shareholders. It has to be sent at least 21 days prior to such general meeting. So, at least 21 clear days prior, the company will have to send the notice. Now, in this notice, the company will also have to specify all the details relating to e-mode of voting. The company will have to specify when is this e-mode of voting going to start. So, what is the commencing time and what is the ending time. The company will have to specify in the notice that every single equity shareholder has the right to vote through electronic mode. If they have voted through electronic mode and then they still come in the general meeting, then they will not be allowed to vote again. They of course can come in the general meeting, but they will not be given the right to vote again if they already have voted through electronic mode. Now, they also have to specify the procedure of e-mode of voting. So, what is going to be the login ID, what is going to be the password, how they have to go ahead with this e-mode of voting, all of that procedural steps will have to be specified in the notice. Now, this notice has to be personally sent to each of the members. Apart from that, the company will have to also put up this notice on the company's website. The company will also have to publish it in 2 newspapers. One is the vernacular newspaper, wherever the registered office of the company is there, and second is the English newspaper, which is circulated all across the country. So, there also the company will have to publish these details that the e-mode of voting is available to all of its existing members. In case any of the members are unable to access this e-mode facility, then what kind of email address they can use for grievance redressal, those details will also have to be specified in this notice as well as on the company's website, and the company's website details will also have to be specified in this notice. So, that is the detail relating to the notice. Now, with respect to this E mode of voting, what is the minimum and maximum time period for which the company can open this E mode of voting facility? See, with respect to that, the company will have to give a minimum 3-day time period for which this E mode of voting should be open. So, during at least 3 days, the members can vote through electronic mode. Of course, more than 3 days is very much welcome, but not less than 3 days should be given by the company. 3 days is the minimum. Now, when should the company end this E mode of voting? See, whenever the general meeting is there, just before that general meeting, up till 5 p.m. in the evening, the company can keep this E mode voting facility open. But the company cannot keep it open after 5 p.m. on the prior date, prior to the general meeting. So, this is the maximum time period for which the company can keep the E mode facility open for voting. Now, who can actually vote through E mode? So, is it only the physical shareholders or is it also the demat shareholders? See, we know that the company's share can be physical shares, that means shares supported by a share certificate, or it can also be possible that some people have purchased the shares online through their demat accounts. So, it can be dematerialized shares also. Now, here this E mode of voting is applicable for both of these types of shareholders. Now, whenever the voting is conducted by E mode, apart from E mode of voting, of course, there is a general meeting and of course, there is some voting done in the general meeting also. After that, all of these votes will have to be counted with respect to different resolutions and the total votes will be clubbed, and accordingly, we will decide whether the resolution is passed or it has not passed, right? So, after the general meeting, someone will have to count these votes. So, who is going to count all of these votes? Now, it is a very crucial thing. The counting of the votes can be manipulated also. Therefore, it has to be given to some professional party who can be unbiased and they can count these votes. So, therefore, we have the scrutinizer who has to be appointed. So, with respect to E mode of voting, it is a board of directors who are going to appoint one or more scrutinizers depending on the requirement. Now, these scrutinizers should not be the employees of the company, because the employees of the company will be obviously biased towards the company and towards the directors. So, we want unbiased professional parties. Therefore, employees cannot be scrutinizers. So, then these scrutinizers can be chartered accountants, they can be cost accountants or any other suitable professional according to the board of directors. Now, these scrutinizers are going to count all of these votes in the presence of 2 witnesses. So, what are the functions of this scrutinizer? Well, the scrutinizer is going to be given all the records relating to the meeting. So, how many members were present, how many members have given the vote through electronic mode, etc. Now, once all of those documents are given to the scrutinizer, he is going to evaluate all of these votes. So, he will have to prepare a report on the number of votes casted in favor and the number of votes that are casted against with respect to a resolution. So, this report has to be prepared by the scrutinizer within 3 days from the end of the general meeting. So, that is the timeline given with respect to the preparation of the report on E mode of voting. The scrutinizer will have to prepare the report within 3 days of the end of the general meeting. Now, he is going to prepare this report and he is going to submit it to the chairman. Now, in this report, basically, whether the resolution is passed or not, that is going to be stated along with the votes cast in favor and against. Right. Now, once the scrutinizer has given his report, then this report and the result of the resolution is going to be published on the company's website. Now, the next section is section 109. This section talks about voting by poll. So, what is voting by poll? See, when we say voting by show of hands, every single member has just one vote. Whether they have 100 shares or 1000 shares or 1 lakh shares, they all have one single vote only when we talk about passing of the resolution. But when we say poll basically means that the voting rights will depend on the shareholding of such a member. Now, when we say voting by show of hands, the voting is done by raising their hands. Now, when we say voting by poll, then the vote is going to be conducted anonymously in a piece of paper. So, a piece of paper will be distributed in the meeting to all the present shareholders, and they are going to write down their name and they are going to write down how they want to vote, whether they want to cast all their votes in favor or against, whether they want to cast some of their votes in favor and some of their votes against. Now, the total number of votes with respect to one member will depend on how many shares they are holding in the company. So, what is the total percentage shareholding of that member in the company? So, if suppose a shareholder has 5% votes and he says yes to a resolution, then it will be considered that 5% votes are cast in favor of that resolution. Alright, and that voting is going to be done on a piece of paper called the polling paper. Now, this polling paper is in a prescribed form, which is NGT 12. So that is called voting by poll, and this is conducted in the general meeting itself. Now see, generally speaking, always the voting is done by show of hands only. But sometimes, of course, if a shareholder has a lot many votes, he will not be satisfied if he is given only one vote. If only voting is done by show of hands and he gets only one vote, even though he has invested a lot of money in the company, then he might not be satisfied. So in that case, such a person may want to conduct voting by poll. He might want to demand poll, right? So in that case, such a member can do so. So rules relating to who can demand for a poll and how the poll is conducted, that is stated in your section number 109. So section 109 says that the poll can be demanded by the chairman of the meeting. Now here the chairman might even have very less number of shares, or he might not even have any shares, but in that case also the chairman has the right to demand a poll. Alright. The second point is that the members can also demand a poll. Now when I say members here, it means their proxies also. So whether it is members or proxies, they can also demand a poll. But these members or the proxies, they should combined together have a minimum number of voting power or shareholding with respect to the company. So the minimum requirement, if it is a company having share capital, then in that case, the minimum number of shares that such a member or the proxy should combined together have in order to demand a poll is 1/10 share capital. See, when I'm talking about a company having share capital, then in that case, a minimum of 1/10 of the share capital of the company should be held by such a person, or a minimum of 5 lakh rupees or more of paid up value of share capital should be held by such a person or the proxy. Alright. Now, when we talk about a company not having share capital, in that case, such a member or the proxy should have a minimum of 1/10 of voting power in the company. So, if this minimum criteria is satisfied, then such member or proxies or even a group of them together, they can demand for a poll. In that case, the voting will not be done by show of hands. In that case, the voting is going to be done by poll. Now, when is this poll demanded? See, initially, of course, the voting will be done by show of hands only. So, either a person can demand a poll before the voting is done by show of hands, or even at the time when the voting is done by show of hands and the result is declared, at that time also someone can demand a poll, provided they have this minimum number of shares. That means they have 1/10 of the share capital of the company, or they have 5 lakh rupees or more of paid up value of the equity shares in that company, right? So they can then demand a poll. Now, once the poll is demanded, the company might require a little bit of preparation for conducting the poll. See, poll is to be conducted in polling papers. Now, these polling papers are prescribed in a form called MGT12. So, the company will have to prepare all of these forms, and then they will have to circulate it to all the existing shareholders. So, sometimes it might be possible that the company might require some additional time period to prepare for the poll. So, in that case, it is stated that whenever the poll is demanded, then within 48 hours, the poll should be conducted. So, the company can also conduct the poll in the same general meeting in which the poll is actually demanded, or the company might take some additional time period and it may conduct the poll within 48 hours of demanding of the poll. Alright. Now, let's talk about the procedure which is stated with respect to conducting of the poll. See, polling is basically done on a piece of paper, which is the polling paper in MGT12 form. So, the company will have to prepare all of these forms. Now, the company will also have to appoint a scrutinizer. See, once the polling process is completed, someone professional, someone unbiased will have to count all of these votes. So, therefore, a scrutinizer has to be appointed. Now, here, with respect to poll, the scrutinizer is appointed by the chairman. Now, the scrutinizer should not be an employee of the company for the same reason as we discussed in E mode. See, an employee of the company can count the vote in a biased manner. So, we don't want someone to count the vote in a biased manner. Therefore, we want someone who is not an employee of the company. So, this scrutinizer who is appointed by the chairman should not be an employee of the company. Once this scrutinizer is appointed, then he will be given all the related documents. So, he will be given all the list of the members, all of the list of the members who are present in the general meeting. Their specimen signatures will be given to this person. He will also be given the polling papers. Accordingly, the scrutinizer is going to distribute all of these polling papers to the members and their proxies. So, if the member is personally present, then these polling papers will be given to the member. Now, if suppose joint holders are there, then the polling paper will be given to the first named joint holder. Otherwise, if the first name joint holder is not there, then the polling paper can be given to other member also. In case the member is not there at all and a proxy is present, then the polling paper is going to be given to the proxy. Now, once these papers are distributed, then all of these members are going to vote on this polling paper. They are going to then submit this polling paper. Now, this paper is going to be collected in a sealed box. Now, once all of these polls and votes are collected, later on the scrutinizer will evaluate and count these votes. So, he will have to prepare a report. Now, when the scrutinizer counts all of these votes, he will do that in the presence of 2 witnesses, and accordingly he is going to prepare a report. Now, this report will basically say how many shareholders voted in favor and how many shareholders voted against, and he is going to submit this report to the chairman. The report which is prepared by the scrutinizer, that is also in a prescribed format, which is NGT 13. Right, so once this report is prepared and submitted to the chairman, then the chairman will have to declare the result. So, if the poll is conducted in the meeting, then in the meeting also the result can be declared. Otherwise, in case it is not possible to declare the result in the same meeting, then such result will be declared on the company's website. So, this is the entire procedure relating to voting by poll. The next section we are discussing is section 110, which talks about postal ballot. Now, what is a postal ballot? Now, if you bifurcate this word, it basically comprises of the word postal and ballot. Postal means by post and ballot means a method of voting. So, whenever the company gives an option to its equity shareholders that they can simply vote by post, simply sitting at their homes, they can cast their votes by post, then this is called voting by postal ballot. Now, with respect to that, we have section number 110. See, postal ballot doesn't only include voting by post. See, the definition of postal ballot is given in section 2, subsection 65. It includes voting by e-mode also. See, the main purpose of voting by postal ballot is to allow those equity shareholders who cannot come in the general meeting to vote. So, they can vote simply sitting at their homes. So, they can vote by postal ballot also, and even if they vote by electronic mode, it is going to be considered the same as postal ballot. So, with respect to postal ballot, we have section 110. Now, this section basically talks about a few types of businesses for which postal ballot is compulsory. Then it also talks about few types of businesses for which postal ballot is not allowed at all. These businesses have to be conducted in the general meeting only. So, first let's discuss those businesses for which postal ballot is compulsory. So, there is a list of businesses that is given. So, I am just going to read out what is this list of businesses for which postal ballot is compulsory. So, first is if the company wants to change its object clause. The second is if the company wants to convert itself from a private to a public company or from a public to a private company. Third is where the registered office of a company has to be changed. In that case, if a resolution is required, it has to be conducted through postal ballot. Then if the company wants to issue differential voting right equity shares, or if the company wants to vary the rights relating to a certain class of shareholders, then in that case also the voting will be done by postal ballot. If the company wants to buy back its own shares, or if the directors have to be elected according to section 151, then for that also postal ballot is compulsory. Then if the company wants to sell its major undertaking, or where the company wants to give loans or guarantees beyond a specified limit, in that case also postal ballot is compulsory. So, these are all the list of businesses for which postal ballot is compulsory for every company, whether it is a private company or a public company. Now, see, all of this is not applicable for certain types of companies. See, if it is a one-person company or where the number of members in a company are up to 200, then these two types of companies, they don't have to follow postal ballot method for all these types of decisions. So, when it is a one-person company, it only has one member. So, any which ways this section will not be applicable, right? Now, when we are talking about any other company which has up to 200 members, then in that case also, since it is a small company, it doesn't have to conduct the businesses by postal ballot. So, for these two types of companies, this section is not mandatory. If they want to follow it, they can follow it. Otherwise, it is not necessary for them to follow it. Alright. Now, let's discuss those types of businesses for which postal ballot is not allowed. Now, what are those businesses? See, first is ordinary businesses. What is an ordinary business? See, ordinary business means in the annual general meeting, whenever the company wants to declare its dividend, or whenever the company is considering its financial statement and finalizing it, or whenever the company is appointing directors, or whenever the company is appointing or reappointing auditors and fixing their remuneration. These 4 types of businesses in the annual general meeting are called ordinary businesses. So for these 4 types of businesses, postal ballot is not allowed at all. Alright. Apart from that, all the other types of businesses wherein the directors or the auditors are supposed to be heard in the meeting, for that also postal ballot is not allowed. So these types of businesses will have to be anyhow conducted in the general meeting itself. Right. So now you know the types of businesses for which postal ballot is compulsory, and you also know the types of businesses for which postal ballot is not allowed. You also know the types of companies for which postal ballot is optional. Right. Now let's discuss the method of postal ballot. See, for postal ballot, the company will have to send a notice to each of the shareholders. Apart from that, the company will also have to publish this notice on its own website and 2 newspapers, one being English newspaper and one being vernacular newspaper. Now, in this notice, basically, the company is going to put out a form in which the voting will be cast by the equity shareholders. Apart from that, the company will also write in that notice that the voting is going to commence on this date and it is going to continue till this date. The company will have to specify that the postal ballot votes should be received anyhow within 30 days from issuing of this notice. Then apart from that, the company will specify that in case anybody loses this form, then they can go on the company's website and from there they can download this form again and they can cast their votes. Right, so all the procedure relating to postal ballot will be put down in this notice and sent to every single equity shareholder and the company's website and 2 newspapers. Accordingly, the equity shareholders are going to cast their votes, they are going to write down their votes, they are going to put it on the envelope and then they are going to send it to the company. Now here, these votes will have to be counted by somebody. So then, accordingly, the scrutinizer will have to be appointed. So here, the scrutinizer is appointed by the board of directors. So here, the board of directors are going to appoint a scrutinizer. It can be 1 or more scrutinizers, but such persons should not be the employee of the company. Accordingly, the scrutinizer is going to prepare the report within 7 days of closing of the postal ballot, and this report is going to be given to the chairman. Accordingly, the chairman is going to declare the results of postal ballot voting. Now, the next section is section 111. This section talks about circulation of members' resolution. So, what is this section about? See, whenever there is an annual general meeting going to be held for any company, before that annual general meeting, it may be possible that some of the shareholders want to put forward some type of resolution. It may be possible that some of the shareholders want the company to issue bonus shares. Maybe they want the company to issue right shares. Maybe they want certain type of person to be appointed as a managing director in the company or something like that. So, wherever the shareholders have certain opinions with respect to how the company should be run, if they want to suggest some type of resolutions before an annual general meeting, then can they suggest those types of resolution? Well, yes, they can suggest those types of resolution. The power is given here in section number 111. But there is a certain procedure which has been prescribed. See, generally, whenever decisions are taken by the company, it is the board of directors who decide what type of resolutions will be passed. Then they send the notice to all the equity shareholders. Accordingly, general meeting is conducted. Then the voting is done based on those resolutions. This section 111 basically gives power to the equity shareholders that they can also suggest certain types of resolutions. So, with respect to that, it is stated in section 111. Whenever annual general meeting is going to be held, at least 6 weeks prior to the annual general meeting, limited few number of equity shareholders should send this request to the company. They should send a letter to the company stating that they want to pass certain type of resolution. Right? Now, there is a number which is specified over here. That means just one equity shareholder holding 1 or 2 equity shares will not get the right to request a new resolution for the company. There is a minimum limit which has been specified in this section. This section says that if it is a company having a share capital, then at least 1/10 of paid up share capital should be held by such members who are requesting this resolution. In case the company does not have share capital, in that case, at least 1/10 voting power of the company should be in the hands of these members who are requesting this type of resolution. Right? So, once these members have come together, they will have to draft out this requisition of the resolution, then they will have to send it to the company. This request has to be signed by all of these members who are requesting this resolution. Right? Now, if they have sent this request at least 6 weeks prior to the AGM, then the company will have to hold this resolution. The company will have to send a notice to every single member, and then accordingly this resolution will also be taking place in that general meeting, which is the annual general meeting. Now, sometimes it happens that with a resolution, additional statement also has to be circulated. As we have discussed, explanatory statement. Similarly, certain types of resolution, if they are special business, then they require an explanatory statement also. Now, if suppose these members want to pass these kind of resolutions, let's say they want the company to declare bonus shares or right shares, then in that case they will have to draft out that explanatory statement also, and they will have to send that also to the company. Then the company will then send a notice to all the equity shareholders along with that explanatory statement. Now, sometimes it may be possible that this right which is given in section number 111 to these shareholders, it might be misused. What do I mean by that? Let's take an example. It may be possible that some of the equity shareholders, they are very fed up from the company and they want to wind up the company. So, they want to consider a resolution wherein they want to pass this resolution of winding up the whole company. Now, can they do so? Well, of course, section 111 gives them the right to send this kind of request to the company that such resolution should be considered in the general meeting. So, of course, they can send such a request to the company. Now, in that case, if suppose the company goes ahead with this resolution of winding up, it is going to create a lot of panic in the company and outside the company with all the stakeholders. So, these kind of decisions can actually hamper the company's image. So, in that case, the company can ask the central government and stop this explanatory statement from being circulated among the shareholders. In such case, the company can go to the central government, the company can show the central government that listen, these shareholders are asking us to wind up the company and it is going to hamper the company's growth and the company's image in the market. So, we don't want to pass this kind of resolution, we don't want to circulate this kind of statement with all the equity shareholders. If the central government also thinks that the company is right and that these members are not thinking correctly, they are requesting a very ridiculous kind of a resolution, in that case the central government will allow the company to not circulate this resolution among the shareholders, right. So, this is your section number 111 which talks about circulation of members' resolution. Let's revise section 111 one more time. See, before an annual general meeting, if there are few number of members who want to suggest a different type of resolution to be passed in that annual general meeting, then they can send this request to the company. But the condition here is that these members should have a minimum of 1/10 of the voting power of the company. If it is a company having share capital, then these members should have at least 1/10 of the paid up share capital of the company. Then they can send a request to the company that in the annual general meeting, certain type of decision should be considered. Right. So, if they want that the bonus shares should be issued, then they can send this kind of request to the company. They will have to send this request at least 6 weeks prior to the annual general meeting. They will have to sign it and they have to send it to the registered office. Accordingly, when the company receives it, company is going to send a notice to all the equity shareholders that this new resolution is to be considered. So, please read the relevant documents and come in the general meeting. So, in the general meeting, we will also consider this resolution. Now, with the resolution, of course, a statement also can be given. This statement is basically going to explain the nature of business that is going to be considered. So, if the members wanted bonus shares to be issued, then how many bonus shares, from what source these bonus shares are going to be issued, what is the reason of issuing these bonus shares, all those details will be covered in that explanatory statement. Now, this explanatory statement will have to be drafted by these members and sent to the company. The company is then going to send it to all the equity shareholders. Accordingly, these shareholders will come in the AGM after reading this notice and the explanatory statement, and this decision will be considered in the meeting. Now, sometimes if the company thinks that this resolution is defamatory for the company, the statement that is circulated is not good for the company's reputation, then the company can go to the central government and the company can request the central government to give them the power to stop the circulation of this statement. If the central government gives the power, then accordingly the company does not have to circulate this statement among any of the equity shareholders. Alright, so this is what is stated in your section 111. Your next section is section 114 of the Companies Act. Now, this section talks about ordinary resolution and special resolution. You already know what is ordinary resolution and special resolution. I'm just going to quickly go through them one more time. See, ordinary resolution means when the total number of votes cast, when they are considered, and the votes that are cast in favor are more than the votes cast against. Now, what is voting by special resolution? See, in special resolution, the number of votes in favor should be 3 times or more of the votes cast against. Now please note here that we are only going to consider the votes that are actually cast either in favor or against. Now those people who have not casted their votes will not be considered. So only the votes in favor and against are going to be considered, and then we will have to check whether the votes cast in favor are more than the votes cast against, then ordinary resolution will be passed. In case of special resolution, if the votes cast in favor are 3 times or more of the votes cast against, then the special resolution will be considered to have been passed. Now here we know that the voting can be done by multiple different ways. It can be done by show of hands, it can be done by poll, it can be done by electronic mode, by postal ballot. So all of these types of methods of voting will have to be considered. We are going to consider all the votes that are cast by poll, by postal ballot, electronic mode and by show of hands, and accordingly we will see whether the resolution is passed or it has not passed. Now we know that the members can also vote themselves or they can vote through proxy. So we are going to consider the votes cast by proxy as well as the votes cast by the member himself, and accordingly we are going to decide whether the resolution is passed or it has not passed. Now sometimes the chairman also has a casting vote. Now what is a casting vote? See, in the article of association, sometimes the chairman may be given a power that in case of equal votes, the chairman is going to get one more additional vote. According to that one more additional vote, it is going to be decided whether the ordinary resolution is passed or not passed. So such a casting vote of the chairman will also have to be considered whenever we are deciding whether a resolution is actually passed or it has not passed. So I hope you have understood. That is your ordinary resolution and special resolution. See, whenever the company is going to pass a special resolution, these details will have to be specified in the notice of the company's general meeting. Right, so along with the resolution, it has to be stated if it is a special resolution or not. Now let's discuss section 96 of the Companies Act, which talks about annual general meeting. So general meeting is the meeting of the equity shareholders wherein major decisions relating to the company are considered. When we say annual general meeting, it is one main general meeting that every stakeholder is waiting for throughout the financial year. With respect to this, we have section 96. Now section 96 says that every company, whether it is a private company or a public company, it has to have one annual general meeting for every financial year. Now the timelines are also specified in this section number 96. Now this section 96 is not applicable for a one-person company. See, one-person company only has one member. So of course there is no need for general meeting or all the provisions relating to the general meeting. Therefore this section is not applicable for one-person company. But for all the other companies, this section is applicable. So every other type of company has to hold an annual general meeting for the financial year. Now when is this annual general meeting going to be held? That is stated in section 96. See, where a company is newly incorporated, then its first annual general meeting should happen within 9 months from the close of the financial year. So the first financial year ends on the 31st March, then within 9 months the company should hold its first annual general meeting. Here we are talking about first annual general meeting. Now this means that the company should hold it till the 31st of December of that year. Right. Now, in case the company is unable to hold it within the first 9 months, then can they get any extension from the registrar of companies? Well, the answer is no. There is no additional time period allowed by the registrar of companies for the first annual general meeting. Right. Now, let's talk about the subsequent annual general meetings. After the first year of incorporation, after that for every financial year, from the date of ending of the financial year, the company must hold its annual general meeting within 6 months. So every year is going to end on the 31st of March. So within the next 6 months, the company should hold its annual general meetings. That means it should hold it within till the 30th of September of the coming year. Right. So this is with respect to every subsequent financial year. Here we are talking about the subsequent annual general meetings. Right. Now, let's say that the company is unable to hold the annual general meeting due to certain reasons. Maybe the company's accounts are not audited, or maybe the company is going through certain changes in its operations. So, it has not been able to hold the annual general meeting. Now, here with respect to subsequent annual general meetings, can the company request the registrar of companies to give some extension? Well, the answer is yes. 3-month maximum extension can be allowed by the registrar of companies on sufficient grounds to the companies in case they are unable to hold their annual general meeting within the 6 months from the close of financial year. Right? So that means extension by the ROC can be given with respect to subsequent annual general meetings, but it is not allowed with respect to the first annual general meeting. Alright. Now, there is another point with respect to timeline. given in this section, it says that 2 annual general meetings, the maximum gap between 2 annual general meetings can be 15 months only, right? So, whenever the company is holding the annual general meetings, this point also has to be considered. Now, where is this annual general meeting going to be held? See, it is going to be held in the city where the registered office of the company is there, or in the registered office itself. So, this is the point which is stated for the listed companies. Now, if let's say there is a company which wants to shift its annual general meeting to some other city, can they do so? Well, see, for that we will have to check this section number 96. See, for listed companies, it is very clearly stated that the listed company can hold its annual general meeting either on the registered office, or it can hold it in the same city where the registered office is there. It cannot hold the annual general meeting anywhere outside that city wherein the registered office is there. Now, with respect to unlisted company, the provisions are slightly different. See, for an unlisted company, if the unlisted company wants to hold its annual general meeting in some other city, they can do so, but they will have to take the prior consent of all of its members, either in written form or in electronic form. So, let's say there is an unlisted company. Now, this company has its registered office in Pune, right? And it wants to hold its annual general meeting, let's say in Jaipur in Rajasthan. Can it do so? Well, it can do so, but before holding its annual general meeting in Rajasthan, in Jaipur, it will have to first ask all of its members. If all of the members give the consent in writing or in electronic mode, then such unlisted company can hold its annual general meeting in any other city also, apart from the city in which the registered office is there. But for the listed companies, always the company can hold its annual general meeting at the registered office or in the same city where the registered office is there. Now, annual general meetings, what is the time period within which it is going to be held? See, it is going to be held during business hours, right? That means from 9 am till 6 pm. So, during that time period, the AGM is going to be held for every company. Now, can it be held on a national holiday? That means on the 2nd of October, on the 26th of January, on the 15th of August, or any other declared public holidays? Well, the answer is no. Annual general meetings cannot be held on national holidays. Your next section is section 97. Now, section 97 talks about default of the company in not holding the annual general meeting. Now, we know that annual general meeting has to be held within a prescribed time period, as we have just discussed. Let's say the company does not hold the annual general meeting. Let's say this company does not even take the permission of registrar of companies. So, it is not even applying for extension. For some reasons, the company is not holding annual general meeting at all. Then what can be done? In that case, of course, the members will be waiting for this AGM to be held. They will be waiting for certain businesses to be conducted, right? So, what can the members do? See, here the member can apply to the National Company Law Tribunal. So, if the member finds out that the company is not holding its AGM, the member can go to the tribunal. It can apply to the tribunal and ask the tribunal to make the company hold its AGM. In that case, the tribunal is going to pass an order to the company as per this section 97, stating the different directions according to which the company will have to hold its annual general meeting. So, accordingly, the company will have to fulfill those directions and hold an annual general meeting. So, section 97 basically gives a power to the tribunal to give an order to the company to actually hold its AGM in case they have not held it already according to section 96. Next section is section 98. Now, section 98 is similar to section 97. The only difference is that it is applicable for EGMs, that is extraordinary general meetings. So, if suppose a company is not able to hold its extraordinary general meetings, then the members of the company or the directors of the company can give an application to the National Company Law Tribunal asking the tribunal to give an order to the company to hold an EGM. Sometimes the tribunal can suo motu also pass an order under this section number 98 to the company that the company should hold an extraordinary general meeting. So, wherever the company is not holding an EGM or maybe it is not practical for the company, then on application or suo motu, the tribunal can pass an order stating that the company has to hold the EGM. So, accordingly, some directions will be given by the tribunal on which dates, on which locations and how the arrangements will be made for the EGM. Accordingly, the company will have to hold this extraordinary general meeting, right? So, that is your section 98. Next is your section 99. Now, let's say the tribunal has passed an order under section 97 or section 98 asking the company to hold its AGM or its EGM. and still the company is not holding its AGM or the EGM, then what is the penalty applicable on such company and the officers in default in that company? That is stated in section 99. Now section 99 says that even after the order of the tribunal, if the company fails to hold its AGM or EGM, then company and officer in default shall be liable to penalty up to 1 lakh rupees, and for continuing default, 5,000 rupees per day of penalty is going to be applicable. Now the next section is section 100, extraordinary general meetings. See, throughout the financial year, many a times the company has to take different types of decisions which require a general meeting to be held, which require the approval of the equity shareholders. Now the company cannot wait for the annual general meeting all the time. So if requirement is there, then the company can hold extraordinary general meetings also based on requirement. Now section 100 talks about the provisions of extraordinary general meeting. See, EGM can be called either by the board of directors, or it can also be called by the members of the company. Now, when I say members, there is a prescribed limit which is stated with respect to these members. See, simply one member having one share cannot ask for the company to hold an EGM. So here section 100 says that if the company is a company having share capital, then such members who want to request an EGM, they should be holding at least 1/10 of the paid up share capital. Now, in case the company is a company without share capital, then in that case, such members who want to request an EGM, they should be holding at least 1/10 of the voting power of the company. If they are holding this minimum number of shares or minimum voting power, then they can write down a request to the company saying that they want to hold an EGM. Now, once they send this request or requisition to the company, then the company will have to hold an EGM. But here the important point is that whenever a requisition is sent by these members, then they should at least send it 21 days prior to the date on which they want the EGM to be held. Let's say they want the EGM to be held on 30th of July, then they should send this request to the company at least 21 days before that requested date. Alright. Now, once they send this request to the company, then from the date of receipt of this request, the company should proceed with holding of the EGM within 21 days. At the most, the company should proceed with it within 45 days. Now, what is the place of holding this EGM? See, we know with respect to AGM, the place of holding of the AGM for a listed company was a registered office or the city of the registered office, or any other city for an unlisted company, provided the unlisted company takes prior consent of all the shareholders, right? That was with respect to AGM. Now here we are talking about extraordinary general meeting. See, there is no provision contained in the section 100 talking about the place of EGM. It simply says that it has to be held in India. It doesn't say that a company has to hold its extraordinary general meeting at the registered office or in the same city where the registered office is there. So that means EGM can be held anywhere, but it has to be held in India only. Alright, it is not necessary to hold an EGM in the place where the registered office of the company is there. Now there is an exception to this. The exception is a wholly owned subsidiary of a company which is incorporated outside India. So let's see, there is a company which is incorporated in Australia. Now that company has invested in one of the Indian companies, and it has invested 100% in this company. That means this company's 100% shares are held by a company which is incorporated outside India. So this company which is in India, it becomes a wholly owned subsidiary of that company which is outside India. Now with respect to such company, because all of its members is actually a company which is based outside India, in that case, if this company wants to hold its EGM outside India, then this company can do so, right? Let me repeat it. See, for any company, generally they can hold its extraordinary general meeting in India anywhere. It is not necessary to hold its EGM in the same place where the registered office is there. But with respect to a wholly owned subsidiary of a company which is incorporated outside India, for such a company, the EGM can even be held outside India. Alright, for the other types of company, the EGM cannot be held outside India. The next section is section 115. This talks about special notice. What is a special notice? Let's try to understand this with an example. So suppose there is a company. This company is holding a general meeting. In that general meeting, a retiring auditor is to be reappointed. right? So with respect to that, the company has sent a notice to all of its equity shareholders. Now we know the notice has to be sent at least 21 days prior to the general meeting. Accordingly, the company has sent this notice to all of the equity shareholders. Now many of the equity shareholders don't want the same person to be appointed as the auditor again. So they want to expressly pass a resolution that this person should not be appointed. They don't want this person to be appointed. So what can they do? See, what they can do is, here they can send a request to the company. They can send a letter to the company saying that we don't want the same person to be appointed as the auditor, and in fact the company should pass another resolution to not appoint this person as the auditor. Alright, so if suppose these members sent a request to the company, then the company will again have to send a fresh notice to all the equity shareholders at least 7 days prior to the general meeting, saying that now, because the members have requested, we are in fact going to be passing a resolution wherein the retiring auditor will not be reappointed, right? So this kind of notice is going to be sent to all the equity shareholders. Now this is called the special notice. Now this special notice is applicable just as the example that we discussed. It is also applicable on certain other matters. Now some of these matters are stated in the Companies Act, and some of the matters can also be put down by the company in its article of association. With respect to these matters, whenever these matters are to be considered in the general meeting and the company sends a notice to all of the equity shareholders, if the equity shareholders are not satisfied, they can send a letter to the company saying that they don't want certain things to happen. They want a different kind of resolution, right? In that case, this section 115 says that such members should send such a notice to the company at least 14 days prior to the general meeting. Now, at least 14 days prior, the company is going to receive this notice. Accordingly, the company is going to draft a fresh special notice to consider a new resolution, and then the company is going to circulate this notice at least 7 days prior to the general meeting to all of its shareholders, and then in the general meeting that new decision will be considered. Alright, now with respect to these members who can request the company to pass a different type of resolutions, there is a limit which has been prescribed. This section says that these members who can request a different kind of resolution, these members should be holding at least 1% voting power in the company, or they should be holding paid up value of the shares of at least 5 lakh rupees. They should be holding 5 lakh rupees of paid up value of the shares in the company, or they should be holding 1% of the total voting power of the company at least. If they hold that, then they can request the company to pass a different kind of resolution in the general meeting. Alright, so this is what section 115 says. Now section 115 is applicable in certain matters. What are those matters? See, with respect to auditor and director, there are a couple of matters for which this special notice is applicable. So suppose in the general meeting, a retiring auditor is to be reappointed and the members don't want the same person to be reappointed. In that case, this section 115 can be used by the members, right? In case some retiring auditor is to be reappointed and members expressly want this specific person not to be appointed, then they can also expressly pass a resolution stating that this person shall not be reappointed. For that also section 115 is applicable. Now with respect to directors, in case there is a director and the members want to remove this director, then in that case special notice can be used. Section 115 will be applicable. And in case the director is removed or he has resigned and some other person has to be appointed as the director, in that case also this section 115 is going to be applicable. Next section is section 121. This section talks about report on annual general meeting. Now this section is applicable only on the listed companies. It is a very procedural and simple section. This section simply says that for all the listed companies whose shares are recognized or listed on the recognized stock exchange, for those companies, whenever they hold an annual general meeting, within 30 days of the end of that annual general meeting, they will have to submit a form to the Registrar of Companies, and this form is MGT 15. Now this form basically talks about the annual general meeting of this listed company. So when was it held, whether the quorum was present, how many members were present, what were the businesses transacted, etc. Other details relating to the annual general meeting of this listed company, those details are contained in this MGT15 form, and every listed company has to file this form within 30 days of its annual general meeting with the registrar of companies, and that is what section 121 says. Otherwise, there is penalty provisions applicable. Next section is very simple. It's section 116, which talks about the resolutions passed in the adjourned meeting. So suppose there is a general meeting. Let's say it is happening on the 1st of July. Now, due to some reasons, it is adjourned to another date. Let's say it is adjourned to 8th of July. Now, on 8th of July, a decision is passed, a resolution is passed. Then, with respect to that resolution, what will be considered as the date of passing of that resolution? See, here this resolution is passed on an adjourned general meeting. The original general meeting happened on the 1st of July. So, what is going to be the date of this resolution? See, with respect to those resolutions that are passed in the adjourned general meeting, this section 116 says that the date will be considered the date on which that resolution is actually passed. That means the date of the adjourned general meeting. So, with respect to such resolution, the date of that resolution is going to be considered as 7th of July, which is the date of adjourned general meeting. So, that is what section 116 says. Now, the next section is section 117. This section talks about certain resolutions and agreements whose details have to be sent to the registrar of the companies. Now, this section basically says that certain types of resolutions, whenever they are passed, within 30 days of passing those resolutions, the company will have to file this MGT14 form with the registrar of companies. Similarly, with respect to certain types of agreements also, from the date of execution of those agreements, within 30 days, the company will have to file MGT14 form with the registrar of the companies, giving details of those agreements and the resolution. So, this is a compulsory section for all the types of companies. Whenever the company are passing certain types of resolutions or entering into certain types of agreements, they will have to submit the details in MGT14 form to the registrar within 30 days. Now, what are these types of resolutions? See, it covers special resolutions, unanimous resolutions, board resolutions for the appointment of the managing director or the reappointment of the managing director, or resolutions relating to certain class of companies, or resolutions under section 180 or section 179, winding up resolutions, or any other types of prescribed resolutions. The next section is section 118, which talks about minutes of the meeting. So, what is minutes of the meeting? See, whenever there is a meeting, whatever decisions are taken in that meeting, the summary of all of those decisions is contained in the minutes of the meeting. So, minutes can basically be said as the summary of the entire meeting, right? So, with respect to minutes, we have section number 118. Now, this section 118 talks not only about the minutes of the general meeting, but it also talks about the minutes of the committees meetings, class of other shareholders meetings. Then the board of directors meetings also, it also talks about those decisions which are taken by postal ballots. So, with respect to all of these different types of meetings, the company will have to prepare minutes. Now, this section says that the minutes must be prepared anyhow by the company within 30 days of the meeting. So, that is the main provision here. Now, these minutes don't have to be submitted to the registrar. The company simply has to preserve these minutes permanently, and the company has to keep it at the registered office of the company. Now, who is going to sign these minutes? See, if we are talking about the general meeting or the board meeting, it is the chairman of such a meeting who is going to sign these minutes. So, now if the chairman thinks that certain matters are not to be contained in the minutes, if they are defamatory for the sake of from the side of the company, then those defamatory matters will not be put in the minutes. So, it depends on the decision of the chairman. If the chairman wants, he can remove certain matters to be included from the minutes of such a meeting. Now, the next section is section 119. This section talks about inspection of the minutes of the general meeting. See, we know that the general meeting's minutes have to be prepared by the company within 30 days of the general meeting. Whether it is an AGM or an EGM, the company will have to prepare the minutes within 30 days. Now, once the company has prepared these minutes have to be preserved. So, they have to be preserved permanently. So, till the company is in existence, the company will have to maintain these minutes. Now, where are they going to be maintained? See, the company will have to maintain them in the registered office of the company. Now, can the members come and inspect these minutes? Well, of course, yes. See, the general meeting was conducted for the equity shareholders. Therefore, of course, they have the right to see what is stated in the minutes. So, if the members want, they can of course come to the registered office and they can see the minutes of the general meeting. But they can only come during business hours to inspect these minutes. Also, if they want copies of these minutes, they can also acquire the copies of these minutes. In case they want to request the company to send extracts of these minutes to them, they can also request the same. In that case, the company will have to send the extracts within 7 days of the request from the member. Now, of course, in case the member wants the copies of these minutes, the company can charge some fees also for these copies to be submitted to the members. Your next section is section number 120. Now, this section 120 talks about maintenance of the records and registers in electronic form. Now, this section basically says that wherever the company throughout this Companies Act is required to maintain some registers or returns, then such companies have the option. If they want to maintain them in physical form, they can maintain it. If these companies want to maintain it in electronic form, then they can also maintain these records and registers in electronic form. Now, some of the companies have been prescribed in the rules. Now, these companies, for them it is compulsory that they have to maintain these registers and records in electronic form. Now, what are these types of companies? See, there are two prescribed companies. One is all the listed companies. So, all the listed companies will have to maintain records and registers in electronic form. The second is all of those companies which have 1000 or more security holders. In that case also, such company will have to maintain records in electronic form. Now, this section also lays down that the responsibility of maintaining these records and registers in electronic form is in the hands of certain types of officers. Now, these officers are managing director of the company secretary, or any other officer or director as the board may deem fit. So, these are the people who are responsible. They have to ensure that these records are maintained in electronic form for the prescribed companies. The last section of this chapter that we are discussing is section number 122, which talks about one-person company and applicability of certain sections on one-person company. Now, one-person company, as we already know, is a company which has only one member. Now, does this company have to hold a general meeting? Well, see, we have already discussed in section 96 that AGM provisions are not applicable on a one-person company. Now, apart from that section, section 98, section 100 till section 111 are also not applicable on a one-person company. Now, what are these sections about? We have already discussed them. See, the sections relating to the general meeting, that means notice, explanatory statement, chairman, proxy, all of those sections will not be applicable for a one-person company. Obviously, because this one-person company only has one member, so there is no point in holding a general meeting. One person cannot have a meeting with himself, so he can just decide those matters, right? So, this section 122 says that whenever any resolution is required to be passed by a one-person company, then it is sufficient that this one single member of the one-person company, he decides it and then he writes it down in the minutes book, he signs that, and the date which is mentioned in the minutes book, that date will be considered as the date of the general meeting for the purpose of the act. So, there is no need of holding the general meeting for a one-person company. Simply the member can record the decision or the resolution in the minutes book and he can sign it and he can date it. That date will be sufficient. That date will be considered as the date of the resolution or the date of the general meeting for the purpose of the act. Now, this same provision is also applicable in case of board meeting of a one-person company. Now, we know that one-person company can have a minimum of one director also. It is not necessary. Of course, a one-person company can have more than one directors also, but the least number of directors required for a one-person company is one director. Now, suppose there is a one-person company which has only one director, then in that case, does this company have to hold a board meeting? Well, in that case, there is no need to hold a board of directors meeting. In that case, only that one director can decide the decision and he can record those decisions in the minutes book of the board meeting. He can sign it and he can date it. And that is going to be considered as the date of the board resolution. So, that is what is stated in your section 122. With that, we have covered all the sections relating to your chapter 7 of the Companies Act. So, we have covered section number 88 onwards till section number 122 relating to general meeting, registers and returns. I hope you have understood it.